Hey guys, welcome back to my weekly options video series where I'll be sharing with you my options trading game plan for the upcoming week. If you're new to my channel, I post my game plan videos every Sunday, so be sure to subscribe to my channel if you don't want to miss any of the trading opportunities that I'll be sharing. Once again, if you're new to trading options, I would definitely recommend you to start paper trading using the Thinkorswim platform first. I hope you'll find today's video useful. As usual, I'll start off with a quick recap of the trading opportunities I talked about in my last video, so let's get started. So just a very quick market update. If you recall in last week's video, I did briefly mention that the market was a little bit overstretched and I was expecting some form of pullback or retracement either this week or the following week. And the retracement actually did happen. I was expecting it to come back to the 20-day moving average or the 50-day moving average, and it did actually retrace to the blue line, which is the 50-day moving average. And as of Friday's close, you can see that prices are going back way up again. So I would say that it looks like the retracement is pretty much done already, and prices looks to be going up higher moving forward from here. So if you take a look at the Nasdaq chart, the same story as well. So it didn't manage to reach the green line, which is the 150-day moving average. It just came slightly above the green line, and on Thursday and Friday it went back up, and now it's at the 100-day moving average. The same story if you take a look at some of the big tech names, for example, like Microsoft. So for Microsoft, the yellow line, which is the 100-day moving average, has been quite a strong support level. You can see that over the last year, prices have pretty much hovered around the 100-day moving average, which is the line yellow, and went back higher. It did break the support once in November last year, but now prices are going back way higher, and it has always been above the 100-day moving average. So it seems like the prices are going to move higher from here. The correction seems done already for some of these big tech names. And if you take a look at Apple as well, Apple actually hit their 200-day moving average, which is a line in red, and now it's closing above the 150-day moving average. So it seems like everything is overdone, but we shall see next week. I won't go in any bullish position for now, just to test out the market. So as of now, I'll still stay on the sidelines and not enter any bullish positions. So coming back to the Excel spreadsheet, if you recall in last week's video, I did mention that I had two outstanding positions left, and that would be the diagonal spread for Disney and also the double calendar spread for Walmart, WMT, and this is purely an earnings gameplay. So for Disney, I did mention in last week's video that I intend to close the position before the earnings are released. And the reason why I intend to do that is because if you take a look at quite a number of stocks over the last couple of weeks, even though they have announced better than expected earnings, the price of the stock actually still gapped down after the earnings are released. So I didn't want to take the extra risk. So I decided to close the Disney position before the earnings are released. So for Disney, they actually announced their earnings on the 13th of May, which is a Thursday after market hours. And I did close the position. I closed the position on the 12th of May, which is a Wednesday, and for a loss of $790. And looking back later on, we can take a look at the charts. That turned out to be a very wise decision because after the earnings are released, the price of Disney actually gapped down quite significantly. And on the 12th of May, prices of Disney actually briefly broke past the support level, and I just decided to close the trade for a loss. So if you take a look at the chart of Disney, you can see that 13th of May, which is here. So this was when the earnings was released after market hours, and on Friday the stock actually gapped down. And on the 12th of May, which is here, prices actually broke past the $180, $181 price level here, and I just decided to cut loss for this particular trade, and that turned out to be a very good decision because the price of Disney, as you can see as of Friday's close, is way below the $180 price level. So coming back to the other open position, that would be the double calendar spread on Walmart, WMT. As I've mentioned earlier, this is purely an earnings gameplay. So for Walmart, they'll be announcing their earnings on the 18th of May. That's a Tuesday before the market opens. So I intend to close this position before the earnings are released. So I definitely have to close this position by Monday. So as of now, the P&L is showing about $100. Hopefully, when the market opens on Monday, the price don't fluctuate too much, and also the volatility for these two different contracts don't fluctuate by too much. And this number should be a slightly bigger number, and I can close this trade for a profit. So that's pretty much all I have for this week. Let's move on to the trading opportunities for next week. So in today's video, I'll be sharing with you three trading opportunities. The first trading opportunity would be the bull call spread on the VIX. So I actually employ this particular strategy quite often, especially when I feel that there's a retracement or a correction in the market in the next couple of weeks. I will use this as a hedge to my portfolio. And for this particular trade, I actually entered it on the 10th of May. I entered a total of 18 contracts. And the reason why I split them up into two is because I have already closed off 12 of the 18 contracts, and I closed the contract on the 12 contracts on the 12th of May, which is a Wednesday. That was when the VIX spiked up to about 26, 27 price level, and I took some profit off the table. Right now, I still have 6 contracts left open. So if you take a look at the charts of the VIX, you can see that the 10th of May, which is around here, that was when I entered 18 contracts. And on the 12th of May, the VIX spiked up to 26, 27 price level, and I took 2/3 of my positions off the table. Right now, as of Friday's close, the VIX has gone back down to 18. So as I've mentioned earlier, the correction for the market seems a bit done already. So I do expect the VIX to come back down to normal levels again. So probably over the next couple of days, I might close my remaining 6 contracts, but we shall see what happens. So this is one of the strategy that I use to sort of balance or hedge my portfolio, and especially when VIX has reached an all-time low or one-year low. I will usually enter bull call spread on the VIX just to hedge my portfolio a bit. But as of now, seems like the VIX is already coming back down. So we shall see what happens over the next couple of weeks. So moving on to the next opportunity, that will be selling cash secured puts. If you recall, in last week's video, I did mention that I was expecting some form of pullback or correction in the market. And typically when that happens, I will start selling cash secured puts. So, but I only do it on fundamentally good and sound companies that I intend to hold and invest for the long term. So this is specifically for my long-term investment portfolio. So for cash secured put, it's actually pretty capital intensive. So I really only recommend that you sell cash secured puts only, number one, if you have the capital, and number two, if this is a good stock that you really intend to hold and invest in the long term, just in case you get assigned the shares. So I only do it when there's a correction in the market. I don't sell cash secure puts when the market is going up, simply because when there's a correction in the market, the volatility will spike and the premiums that you get to collect from selling cash secure puts are significantly higher. So this week, I actually sold 2 cash secured puts, one for Alibaba and the other one for Apple. And I don't get mind getting assigned for these shares because they are actually way below their intrinsic value. So for Alibaba, I actually sold the put that is expiring on the 18th of June, strike price of $190. I sold 1 contract on the 13th of May for a premium of $3.40. So if the price of Alibaba stays above 190 by the 18th of June, I get to keep this entire $340. Otherwise, if prices fall below the $190 price level, I will have to buy 100 shares of Alibaba at $190, which I don't mind because this value, this $190 actually way below their intrinsic value. So I don't mind accumulating shares of Alibaba at that price level. Same thing for Apple. I sold the 18 June put the strike price of 115. I sold two contracts on the 12th of May for a credit of $2.15 for each contract. So if prices of Apple stay above the $115 by the 18th of June, I get to keep $2.15 per contract. Otherwise, I will be assigned the shares and I have to buy 200 shares of Apple at $115 each. So, which I don't mind because that is also below Apple's fair value or intrinsic value, and I don't mind buying the shares at $115. So, if you take a look at the charts of Alibaba, so typically how I select which strike price is I look at the next support level. So if you see from Alibaba, the price of the stock actually gapped down on 13th of May after their earnings was released. And I decided to sell cash secure puts. I sold it at the $190 strike price, which is around this price level, and I do expect this to be the next support level. So that's why I selected the $190 strike price. And same thing for Apple. If you take a look at the charts of Apple, this is the weekly candles chart of Apple. If you take a look at the chart, you can see that the $115 line is actually the blue line, which is the 50-day moving average looking at the weekly candlestick. So I do not expect the price to retrace so much further. That's why I actually entered this particular cash secure puts. Then the question you might ask me is why don't I buy the shares outright? So because I already have quite a significant allocation in these tech stocks and I'm not in a rush to actually buy them outright. So I usually just sell cash secured puts. If prices fall to that level, I'll be more than happy to get assigned the shares and buy the shares at that price level. So that's pretty much for the cash secured puts. So the correction seems a little bit overdone already and prices seem to be going back up already. So I'm not too sure if there are any more of these opportunities. Otherwise, if the market corrects further, I can continue to sell a couple more cash secured puts on this. So coming back to the last trading opportunity that I'll be sharing with you guys this week. So that would be the double calendar spread strategy. And I use it pretty often on companies that are about to announce their earnings. So over the next 2 weeks, we have quite a number of companies that are going to announce their earnings. And if you take a look at the spreadsheet over here, those companies highlighted in green are the companies that I'm watching very closely. And if there is an opportunity, I would enter a double calendar spread. So I've already entered WMT, Walmart. I didn't enter for JD because the price fluctuation was too much. So the next one would be Nvidia, which is releasing their earnings on the 26th of May after market hours. And we also have MRVL announcing their earnings on 27th of May before market hours. And the next one would be CRM, Salesforce, announcing on the 27th of May after market hours. And same thing for Costco, releasing their earnings on the 27th of May after market hours. So I typically enter the double calendar spread about 10 to 14 days before the earnings are released, and I intend to always close them before the earnings are released. So I'll probably do another YouTube video on how to enter such positions. But as of now, these are the few four actually. There are four stocks that I'm watching very closely. Hopefully, there's an opportunity next week, and I can enter a double calendar spread for this. So that's pretty much my trading plan for next week. I hope you have found this video useful. If you have any questions or suggestions, feel free to leave them in the comment section below and I'll try my best to answer them. If you're new to my channel and enjoyed watching this video, be sure to subscribe as I post videos like this every Sunday and sometimes on Thursdays as well. Happy trading and thanks for watching.